There has been no lack of electric vehicle startups that have gone public in recent years, but the majority of media and investor attention has been focused on high-performance passenger cars produced by businesses such as Tesla and Lucid Motors. In today's video, we'll talk about billionaire Chamath Palihapitiya, how he became successful, his passion for green energy, and whether or not the billionaire would consider adding Lucid to his stock portfolio in the future. Stay tuned for that. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. Billionaire profile and portfolio. Chamath Palihapitiya is a Canadian risk capitalist, engineer, SPAC sponsor, and social capital founder and CEO. He was a senior executive at Facebook who worked there from 2007 to 2011. Palihapitiya was a member of the company's founding team. Upon leaving Facebook, the billionaire established his own venture capital fund, the Social Plus Capital Partnership, through which he made investments in a number of startups, including Yammer and Slack, among others. In 2015, the Social Plus Capital Partnership changed its name to Social Capital to better reflect its mission. Palihapitiya has reaped the benefits of the SPAC renaissance. In late 2019, he was the sponsor of a company that merged with Virgin Galactic, a private spaceflight company, right before Virgin Galactic Holdings' $2.3 billion first public offering. The former Facebook CEO sold his personal stake in the firm for $213 million. His involvement in the initial public offering of health insurance firm Clover Health Investments resulted in him making more than $280 million on a $25,000 investment, which sparked criticism in the media at the time. Chamath invested in a total of 26 companies. On July 12, 2021, they made a new investment in Sunlight Financial, which is a post-IPO equity investment. Chamath Palihapitiya invested $250 million in Sunlight Financial. Billionaire interest in EV companies. A little well-known stock of electric vehicles, Proterra, lately released an SPAC combination with ArcLight Clean Energy Corp., accompanying the Chamath Palihapitiya investment. Proterra is the #1 manufacturer of original EV bus equipment in North America, with over a decade of industry experience. The California-based company Burlingame also produces world-class electric charging systems. Palihapitiya first announced on Twitter that ArcLight Clean Transition Corp., a special-purpose acquisition firm, is to merge with Proterra, taking over the clean tech commercial EV leader. Palihapitiya led a $415 million pipe round in Proterra, which included Daimler Trucks, Franklin Templeton, Fidelity Management and Research Company, and BlackRock Funds. Proterra's commercial EV tech portfolio benefited from the SPAC's resources, including $825 million in cash. Proterra's transaction value is $1.6 billion. Palihapitiya posted a one-page investment thesis on Twitter explaining why he invested in Proterra. However, based on previous public statements, the investor's investment may be motivated by a desire to support clean tech initiatives. According to Palihapitiya, the world's richest individual should be the one who is battling climate change. ArcLight Clean Transition Corp's major purpose of a merger with Proterra also emphasized Proterra's early mover advantage. The firm has sold over 1,000 commercial electric vehicles in North America, exceeding 50% of the market. Billionaire Chamath also favors EV manufacturer Tesla. He claimed in 2019 that the company's first mover advantage in electric cars will offer it a long-term edge over others, and the Time backs his statement as now Tesla is the world leader in EV manufacturing. In terms of electrification, according to Palihapitiya, there is one clear winner, and that is Tesla. Now the question is, will Elon Musk be able to construct the necessary infrastructure? Rather than concentrating on the main course, which is Tesla's competitiveness in the marketplace, people are concentrating too much on the window dressing of Musk's behavior. He continues to own Tesla stock because Musk has been able to follow through with promises on a greater scale, even years after they were originally made. According to the billionaire, betting against innovators who are transforming the world has never been a profitable endeavor. Billionaire Interest in Green Metals. Chamath Palihapitiya, CEO of Social Capital, indicated in a tweet that the production of electric vehicles will increase demand for rare earths, which is why he co-owns MP Materials, the largest rare earths manufacturer outside of China and one of the most enthusiastic EV proponents in the country. That could be one of the reasons why he is so captivated with the electric vehicle manufacturer. We investigated how the so-called green metals, which include metals such as copper, lithium, cobalt, vanadium, and rare earths, fared over the same time period. Climate technology, which will cut carbon emissions, is built on these fundamental aspects. Though they have performed well when compared to the S&P 500, they continue to lag behind the group of stocks that invest in electric vehicles. Copper miners, represented by the Global X Copper Miners ETF, are up by 15.28%. Lithium miners, represented by the Global X Lithium ETF, are up 28.27%, and rare earth stocks, represented by the Van Eck Rare Earths ETF, are up by 62.11% on a year-to-date basis. Palihapitiya definitely sees the gain in this market, and that's why he has it in his portfolio. The conclusion. Now that everything has been covered, the conversation moves on to our topic. Will Chamath Palihapitiya ever consider investing in the electric vehicle firm Lucid? Fun fact, prior to Lucid and CCIV, two SPACs, Churchill and Palihapitiya SPAC, were competing to be the first to make Lucid Motors go public. The billionaire's early involvement in Lucid could be a sign that he will continue to be interested in the company. Future projections, on the other hand, can never be guaranteed. However, given Palihapitiya's passion for the electric vehicle business and his investment in green metal, one could argue that he wishes for all electric vehicle makers to prosper. This opens the door to the possibility of future investment by billionaire Palihapitiya in Lucid Motors if the company continues to prosper. It is undeniable that the electric vehicle business is competitive and that it is still early in its stages in terms of sales and profitability. Chamath owns green metals because they are a strategic play on the green economy, since they are where the supply chain bottlenecks are and where pricing power exists. What are your thoughts? Do you consider Chamath Palihapitiya to be one of the most thoughtful investors out there? If so, why? Let us know in the comments section. Lucid is being referred to as an efficient car rather than an electric vehicle, as per Michael, and he's confident that the company will set a new norm for the electric vehicle sector. That should wrap things up for today. Keep in mind that subscribing is still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.